This is Alan Bush with ADMIS. In the stock index futures, looks like we may be underperforming the news this morning. For one thing, we did have mostly bullish economic reports today, including the leading indicators and the Philadelphia Fed index both coming in better, and yet futures under some pressure. Also yesterday we did have the supportive influence of the Fed's policy statement indicating that they will maintain the current accommodative policies over the near term. However, there is some concern that at some point, possibly in the fourth quarter, the Fed could curtail their quantitative easing program, and there's also some talk that it could totally be eliminated sometime in the first half of next year. So that fear could be creeping into today's market as stock index futures now underperforming the news. Over in the currencies, seeing the dollar index firming. This as the situation in Cyprus continues. Of course, Cyprus banks closed until next week. The situation there remains unresolved as far as the financial problem. So that a negative influence on the euro currency. Also some pressure in the euro after a purchasing managers index in the eurozone coming in weaker than expected. The pound a bit better this morning. This after UK retail sales coming in stronger than many analysts had anticipated. Looks like some short covering coming into the yen. Longer term, we feel that the main trend is still higher for the dollar index, which was lower earlier in the day and is now trading higher. We also feel that the main trend is still lower for the pound and the yen. Even though those two currencies are higher this morning, I think we will see pressure developing. Longer term, the pound and the yen are likely to make new lows for the move. Over in the credit markets, futures were a little bit lower earlier. Now that market is being supported by weaker stock index futures. Of course, there's an inverse relationship there. Any flight to quality gains, we continue to believe, should be viewed as selling opportunities in the credit futures market. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.